The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Folks, I have some of the best news you'll ever want to hear. This will be the last time we discuss baseball. Yesterday, the Dodgers lost the World Series to the great Houston team, but I have to tell you a very funny story. I got a phone call from my ex-wife who lives in Denver, and she reminded me of something. They were getting ready to throw out the first ball, and the first ball was being thrown out by Sandy Koufax and also Don Newcomb, two of the great pitchers of the Dodger past. In 2000, let's try it again, Larry. In 1971, I had worked for Eli Lilly for 6 years, and they had transferred me 5 times, and I was being transferred back to Los Angeles to help set up the research facilities at the Cedars-Sinai Medical Center in Beverly Hills, and I was looking to buy a home. I had 2 tiny little children that were back in Indianapolis, and I was trying to find a place to live. And we'd heard about this place in California called Westlake Village. I was with a real estate agent, and we stopped at a coffee shop in Westlake Village. I liked it immediately. It was just a really nice suburb. It was just everything you could ask for. And anyway, we went into the coffee shop, and sitting there having coffee was Sandy Koufax, number 32. And the real estate guy said he thought I was having a heart attack because I was so excited. Anyway, I said, this is where I want to live. This is where I want to live. I said, let's find a house. So I found a house, and we'd had a big earthquake in California in February of that year, and this was the end of March, 1st of April, and they were. I mean, you couldn't even sell a house there because everybody was leaving. It was almost a 7-point earthquake. There were 60 or 70 people were killed in Los Angeles, so it was an absolute perfect time to buy a house. I saw the house that I wanted, and it was $39,000 new, and it was about a year old. And I bought the house from the man who wrote the book, Kennedy Must Die. It was a book about Sirhan, the fellow that killed Robert Kennedy. And I paid $32,000 for the house, 22% under what he had paid for it. He had only owned it 9 months, and then we went over to the escrow office to settle the deal. And remember, I was bucks up from my silver and commodity trading, so I had plenty of money. And anyway, in the office was Mickey Rooney, the actor, and that was my mom's favorite actor, and she had passed away the year before. Anyway, that's it. Baseball's over. Let's get back to the real world here. First, I posted the chart of Bitcoin up here. I meant to talk about this yesterday. Something really big happened to Bitcoin this week, and that is it is going to be listed on the Chicago Mercantile Exchange. They're going to start out with futures, and then they will definitely have options right after that. That will bring in a lot of liquidity and stuff into the market. So some people think it's a bubble. All I know is that the Merc brought it out. But believe me, that doesn't mean I think it's going to be popular because it's in the news everywhere. But the problem is that, they've had other, contracts there that looked like they were going to be good. Remember, they had a weather contract that was supposed to be fabulous. It bombed like a like a Hiroshima bomb. But if you look at some of the things that are offered at the CME, you'll notice that some of them have virtually no open interest. The real estate one, remember, that was going to be a really big one. That bombed too. So just remember, just because they bring it out doesn't mean that it's sold. The reason why I want you to see that Bitcoin chart, if you're hold on one second. If you remember, we had John Jameson on from the UK last week talking about Bitcoin and the fact that if it could get above that 6,200 level, it could go parabolic. And what I wanted to do, if you'll notice the chart on Bitcoin, you can see the little green line that I marked there. That's where the 3-drive pattern happened, where we completed the ABCD. And, you know, one of the things that we realize here is that when markets really start to accelerate, you don't want to stand in front of them. And that's exactly, you know, what's happened. How high is this going to go? It's anybody's guess. So just be careful. We will be following it because it's going to be listed as a future probably by the end of this year. And but it's got a lot of things in the news, folks. It's almost as much news as we have going on with Apple. So let's just keep an eye on that. Regarding these really, parabolic moves that we're seeing, we have another one this morning that is really contra to what the news is, and this is in the British pound versus the U.S. dollar. I want to bring this up so you can take a look at it, folks. And you'll see that we've had a situation where we've come down, making an ABCD pattern. But if you'll notice the difference between those two ABCD patterns, you'll see that both of those. By the way, this came from one of our listeners in the UK, and he has a mistake on this chart that I had to. Well, I think it's a mistake. Anyway, that swing that he's looking at from the 31st of, and this is a 30-minute chart from yesterday, 2 days ago, that's not a correct swing. And the reason why is it's not long enough, but it does fit with the ABCD program. The difference is in the ABCD program, notice how the CD leg is coming down so hard. This is highly suggestive that the market is going to come down a lot lower because there's just constant selling. All you have to do to prove that to yourself is to go over and see what happened on the 26th to the 27th. You're seeing the same type of thing where we have a lot of wide bars where you got a lot of selling coming in. That's the old falling knife syndrome. You don't want to catch a falling knife. Wait till the knife lands in the ground and then pick it up. I can remember from the days of Mumbly Peg when I was back in Indiana. We used to play that all the time, and that was a good thing to remember. So let's keep in mind. Now, there's been a lot of news in the day. Today is in Tesla. Let's just get this up to take a look at it. We've been watching this for... by the way, before I get to Tesla, thank you for reminding me, Terry. The reason why I posted that chart on the British pound is the British raised their rates by 1/4 point, and that should have brought strength into the British pound, not weakness. So there's something else besides the interest rates are out there. It's probably related to Brexit, would be my guess. But usually when interest rates go higher, the country of origin, like the British in this case, would make interest rates higher. That means people want to have more interest in the pound, so they would buy it. That hasn't happened this morning. It's only dropped 100 and so pips, so it's not a big deal. All right, let's get on here to, we got a break coming up here. We'll post a chart for Tesla and take a look at it. You'll see what we're doing here, and then we'll look at it on a little bit smaller time frame when we come back to the rest of the show, which will be in just a few minutes. Remember, tomorrow we're going to have our good friend Norm Winsky from Astro Trend out of Naples, Florida, as our guest. He always has some great information, and we'll certainly want to be listening to what Norm Winsky has tomorrow on the program. So that's it. We'll be right back. 877-927-6648.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the 15-minute chart of the price of Tesla, so you can see that we've gapped down quite a bit. We've hit $300 a share sometime in the middle of the night, but that's very thin trading. That is the target that we were looking for, 302 to 300 in Tesla. If we close below 300, and with this big wide-ranging bar down that we're going to see this morning, that will be extremely negative to Tesla. So, you know, if you love Tesla, you know, they have it on sale today. There is an ABCD pattern there. But again, you've got this big, wide-ranging bar, so it's best to stand aside or at least wait a day or two to see if that knife is going to either stick in the ground, and you don't want to stick in your leg, that's for sure. Now, one market that we've been watching very, very closely, like we always do, is the euro versus the U.S. dollar. And you'll notice here that we were waiting for the market to make that 382 retracement that from the bottom we had on the 27th. That made that yesterday. As you'll notice, it took out the highs of the 30th and the 31st. It didn't go anywhere. And now what we're looking at is what's going to happen from this level. If we get above the 117 level, that will tell us that, you know, that 382 was no good. But right now, from that 116.70 level, that's what you're looking at. Remember from yesterday that we were talking about the possibility of looking at that euro versus U.S. dollar down around the 114.90 to 114.50. So we want to wait and see what's going to happen. But when you have a market that rallies 6 days and can only make a 382 retracement, folks, you know, that's not usually a very bullish scenario. I want you to look closely here because we're going to make an analogy here. Look at this 382 retracement that we've had over the last 5 days. Now, this is a 30-minute chart, right? Well, one of the things we were looking at yesterday, if you'll recall, was the fact that we had the same pattern looking at the crude oil on a weekly basis. You can see here that, we went up there and we touched the 78% level. We took out the January high by 4 pips. That's $40, folks, in a contract that's trading at 54,000. So there was no buying there. You also had a nice ABCD pattern. So, that's what you try to do is when you're watching pattern recognition is to go to your daily chart and then move down to your 4-hour or your 30-minute and see how the market is, finishing other patterns as you come into the these important fib points, and that's what you have to do is you have to add everything together, to see how things are going to run. Now I've had a request to post a chart from our good friend over in the UK that sent this chart to us yesterday. Excuse me, this is not from the UK, folks. This is from Germany. I'm sorry. Let's get this up here 1 second, and you'll notice that this is a chart of Apple going back, ever since it started trading back, oh my God, way back in the 80s, I think 83 or 84 maybe, but you'll notice that it's completed the big ABCD patterns. The key here, of course, if you'll look at the 3 red arrows right at the end of trading here over the past year and a half, you'll notice that we have completed a 3-drive pattern right at this level right here. The number that it should have gone to was 169 and change. You can see that by the dotted lines that are there. That means that there's 3 targets coming in at that level, and we did hit 169, I believe, yesterday. And I wanted to show that to you because this was something else that we had been working on this week to show you the importance of the opening price. Let's get this up here. Oh, hold on a minute. Okay, here's a daily chart of Apple. You'll notice that the ABCD structure measures up to that 169 level. It's a 1.27 expansion from the high between September the 5th and September the 25th. But if you look at those little red boxes that I started back on September the 5th, those are the opening prices, folks. Notice how the opening price is near the higher low of the day about 70% of the time. Look at yesterday what it did. It took out the previous day's high right at the opening and immediately dropped $4 a share. Now, if you're day trading Apple, that's a good thing to know, because if you take out the previous day's lower high and there's no buying there or no selling, that tells you a lot. That tells you what your risk parameters are and that you're able to, put it together without risking very much. And this is what this is all about. It's all about risk control. By the way, if you have the incentive today, would like to call in, it's 877-927-6648. And, of course, tomorrow we will have Norm Winsky on, which is always a lot of fun. And then next week, hopefully, we're going to be able to have Bill Meridian from Cycles Research out of Vienna, Austria. And we'll see what he has to say to us also. I don't understand what that means, Buffy, what you're asking me about the chart, but that's neither here nor there. A lot of things I don't understand. Let's just move on here to something else that I think is relatively important, and that is the gold. There is, the high frequency and algorithmic trading. It does affect the markets because these folks have a time frame, of a tsetse fly flying over a fruit bowl. I mean, gosh, folks. I mean, these people are only in these stocks for a minute or two, sometimes just fractions. So that is what this high frequency trading is about. I don't know if it's nanoseconds, but it's probably pretty close to that, and that's what gives us. But the volume. But look at the volume that we're having now compared to where we had 15 years ago or 16 years ago. It's it's way lower. So if we didn't have algorithmic trading, there might not be any trading over the New York Stock Exchange. That I don't know, but that stuff's over my pay grade, folks. I actually just look at the patterns, and that's what I try to see. That nothing more, nothing less. That's what we're watching. Okay. 1 second here, and I will be back with you. I want to talk about the gold market because we've been watching this very, very closely. Yesterday, the trading gods here at TFNN were really nice to us. As you can see, yesterday we went right down to that 1270 level. The low was 1269.50. We immediately had a $13 rally in that. We went from 69 all the way up to 83. And if you'll remember, 83 took out the previous day's high from November the 1st. This last night, we took out the high by about a $0.50. Again, it was right at a 382 retracement. And it was also within a $0.50 of the gold being up, $17 an ounce, which would have taken it, which is, 1/2 of the harmonic number. But anyway, right now we have a positive bias in gold. You can see that we made the butterfly pattern on the 27th. Luckily, the people in the den that follow the work of Mr. Z and some of the other folks that are in there were pointing that out, that it was right at a 61% retracement on the weekly chart, and on the hourly chart, it was completing that perfect butterfly. And of course, the market rallied, and then it backed off one more time to give you another chance to buy it. And now it's holding up relatively well. Well, we'll be taking a short break here in just a minute, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to post a chart here for natural gas. Don't usually follow it too much, but we've been watching it a little bit because we thought there was going to be some good support down there at that 78% level. And as you can see, we hit it spot on. And there was actually a small three drive to a bottom pattern that worked out very nicely. You can see that coming in at the 1.618. So the price objective of this is, you'll notice that the 61% retracement, folks, bear with me here 1 second. My alert system is going crazy, and I think it's probably, hold on just a second here. Let's just see where we are here with Tesla. That's what's breaking down. Just give me 1 second. I need to turn this thing off, otherwise it'll just drive me nuts. My guess is it's breaking below 300. No, it's still right there at this 300 level, but that's going to be quite interesting here in Tesla. But let me see. So far, the low has been 300 even, and we're trading at 301. If we close below 300, folks, that's going to be really negative to Tesla. So just keep an eye on it. That's the main thing that you want to keep looking at. By the way, early this morning in the Tiger Den, our good friend Mr. MR from Washington, the state of Washington, up there on that Columbia River, alerted us to the fact that the E-mini Dow Jones had made a 61% retracement there at the 2400 level, and that certainly has worked relatively going on. Okay, we have a question here from Pedro up there in Park City, Utah. That's about my thoughts on gold. Pete, what you have to watch for in gold is, we made that major 61% retracement. We've only been able to rally, $14 or $16 off the bottom. So the key here is if it can hold above that 1270 level is what I'm looking at. And if you remember, let's just bring this chart up again so we can alert our viewers of why it's so important. This is the hourly chart on gold over the past several days. Showing that 61% retracement down there at 1260. We made a low yesterday in that 1270. Now, if you just drew a trend line from the 27th through the last 3 days, you'll notice that if we break below that 1270 down around 1269, that is not going to be a good sign. And this market is still bearish, folks. The rally has only been able to go to a 382 retracement of the high we made back, on the 5th of October. So this market hasn't turned up. When will it turn up? When we close above 1290. That's about $15 from where we are right now. So if that happens, then you've got a really good chance. But until that happens, it's still in a downtrend. Remember that we've been alerted to the possibility that gold is making a bottom because we did this on Monday, and that is when we looked at the XAU. You can see that it went right down to the 78% level within 10 cents of an $81 stock. And then you can see the gold line that's there. And that's basically making that 61% retracement from back in July. That's why it's important. And we were seeing the same thing in the silver market. So it hasn't turned yet, but it is certainly trying. That's the $64 question. If we look at that silver, and remember we're trading, above $17 an ounce now. Look at how silver was acting compared to gold. Gold went down and made a lower low in October, but all we could do in silver was make a 78% level. So what we're trying to do is to build a case. We got the XAU strong, we got the silver strong, we got gold holding at major support, but is it going to hold? We don't know. This is all about probabilities, folks. It's not about certainty. That's the key. Winners think how much money I can lose. Losers think how much money I can win. So always protect your backside. In football, in baseball, and some of the other sports, defense is the key. So you want to be, defensive, and always remember Warren Buffett's 2 major rules of investing. 1, never lose money. Number 2, don't break rule number 1. So keep that in mind. Okay, we've got another pattern, not related to the stuff that we talk about, but we have good commodity people here at TFNN with Andy Hecht, David White giving you some great stuff. But we want to take a look here on this pattern that we're looking at here in December hogs, and we'll have our good friend Rich Anderson from Anderson Capital Management on next week because we've got the harvesting is getting out of the way, and so we're going to have some great moves in some of these grains. But if you look at the December Christmas hogs here, you'll notice that the 3 drive pattern that we're seeing here between March and July was exactly a 1.27 expansion. And then if you look at the 3rd drive that's just completed from July through November, that was also a 1.27 expansion. And if you look at the move between March and April, that was also a 1.618 expansion. So you have 4 things here, folks, to tell you that hogs are topping. And you've got the ABCD structure from September through October, and then you've got those 3 ratios, 1.27, 1.618, and 1.27, all coming together at the same time. Now, hogs trade pretty actively there at the CME in Chicago, but a lot of people don't trade them. I bring this to your attention because I want you to realize that the patterns work in everything, not just in the foreign exchange and gold and some of the things that we look at. Anytime you have an actively traded market, you're going to see these patterns work very, very nicely. That's really what we're looking at. All right, we're going to move back east into Atlanta, Georgia now, a little suburb of Atlanta where we have the Elliott Wave Theorist. And I wanted to bring out a little chart that Mr. Proctor brought out. It's about the Ridex. This is the, people putting money into their 401ks and stuff like this. You'll notice that the bearish assets have hit an absolute all-time low. That's a record low. And, of course, these ETFs haven't been around for a long time, but you can see that we're down into a level that is really, really quite low. And then also he posted another chart that is really nice, and that is the relationship between speculators and what their percentage of bullish is. And you can see that they have the largest bets that they've ever made for the rising Dow that they've ever had. So that's going to be an interesting thing to sort of pay attention to. I have a question about the Elliott Wave Theorist, the theory itself. Folks, I first started looking at Elliott Wave back in 1970 when my good friend John Hill took me in as a mentor. John is 93 now, still trading actively, and his 3 kids are too. And he had showed me the Elliott Wave paper. Proctor wrote the book about 6 years later, but we had looked at this, and John gave me my first proportional divider way back in 1971, where it measures the swings. The problem I had with Elliott Wave is the counting. It's just a little too hard to understand the counting for me because people argue whether it's a 2 or a 4 or a 1 and a 5, and it drives me literally up the market. Well, hey, we've got a caller from Chicago, Illinois. John, are you there?
I am. Can you hear me okay, Larry?
You're coming in just like you were sitting next to me. The problem is we're going to have a break here, so when the music starts, we'll have you right back on. What can I help you with, my friend?
Okay, great. I'm looking at the XOP, and I'm curious to get some of your thoughts on this.
Okay, we got to take a break, and we'll talk about XOP when we get back. Stay with us, John.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we're talking with John in Chicago about XOP. That's the oil exploration ETF. Is that correct?
That's right.
Well, you know, we're certainly we've gapped up, and it looks like we have an ABCD structure going higher. What we have to watch is that where we are right now, and as you can see by the chart that we have posted there, you have that 382 retracement, you know, setting exactly, you know, where it should be. So you have to pay really close attention to that, you know, as you're looking at this. It's a very important thing to remember. I hope you know that's what it looks like, you know, from a situation of a shorter term basis. And John, I've got the chart for the longer term. I think I found it. Here we go. This is the weekly. I want to show you where we stand on the weekly because this is really important. You'll notice that if you'll look at this weekly going back to 2011, you can see the high that we made back on 2014. That was a butterfly pattern that was forming. You'll notice that 1.618 expansion that we had from 2012 to 2014. And then on the way down, you'll notice that it made an ABCD to the downside. And what we're doing now is we're in the midst of a rally. If you're long this, I would certainly put your stop under the low we made 3 days ago, and only just to protect yourself because, you know, you're right testing that 382 again. But right now, the ABCD structure tells us that we're probably going to get up to around 38 or 39. That's what it looks like on the shorter term.
Yeah, that's what I was looking at, and I'm not in this currently, and I did kind of want to ask you more of a trading theory or approach question. I say, I'm not in it. I am curious about it, not planning to launch into it anytime soon, but looking at this daily chart again, it did break out pretty strong yesterday above this most recent high that was set, let's see, 27th of September. So I heard you speak, and I learned so much from you, Larry, every time I listen to you. I listen to you every day, and it's just so helpful. So thank you. Now, as a theoretical approach, I heard you speak yesterday about not chasing breakouts necessarily, and, the swing entry would have been fantastic if I had gotten in right around 32. That would have been lovely, of course. I didn't. But now I see it breaking above this previous, as I say, the 27th of September recent high, and it does look like an ABC. It broke out strong yesterday above that. When would you get in this if you were to get in it?
There's an old rule that I like to remember from Jesse Livermore. It's much better to be out of a market wishing you were in than in a market wishing you were out. And I don't buy breakouts very well. So what I would do is if you really want to get into this, watch for an ABCD structure on maybe a smaller time frame. Go down to a 30-minute or an hourly chart, go down to your smaller time frame, and that will give you your pattern, because that'll determine what your risk is. If you buy it here now, the risk here is into that gap area, and frankly that's close to 10% of the value of this ETF, so I certainly can't chase it here. So I would sit on my hands on this one and wait for something that is a little clearer.
Got it. Yeah. Okay, well, that is certainly very helpful. I really appreciate it.
Thank you. How's your weather there today?
Gloomy and wet and cold.
Oh, it's Chicago. Welcome to winter.
Yeah, pretty typical.
Okay, thanks a lot for calling in, John. We certainly appreciate it.
Thank you. Thank you so much.
Okay. All righty. Now, we'll move on here to the next one and see what we want to talk about. We've covered the Elliott Wave, and we've covered the Euro. We've covered the British pound, and what was the next one that I had on the agenda today? Oh, that's the Japanese yen. And I know what else I wanted to do. Let's get this here. We'll talk about the yen here for a little bit, because we've hit this 114 area so many times in the Japanese yen that you can see the importance of it, folks. If we go blasting it above 115 in this yen, it is really going to go, because it stopped against this 61% retracement, I think, a dozen times here in the last few days, and each time it's done that, it's backed off about 100 pips. What's that telling you is the fact that you've got a market that really wants to get above it, but until it does, it doesn't really mean very much. You have to wait for that breakout to occur, and then you'll be able to see where you stand as far as what the next pattern, what the next objective would be, and then it would be up into that 120 level in the end, which would be quite interesting to look at. Now, I wanted to switch over for just a little bit here, because we've been talking about cattle. Good friend Rich Anderson always gives us some great information on that, but we mentioned this cattle. Hold on to say, you'll see that the cattle gapped up here a couple of days ago. Whenever it gaps up like that, folks, we know two things. A, it wants to go higher, and B, you don't want to be short. You want to wait for the next pattern to complete. So what we want to do now is to take a look at where we are in Christmas cattle this morning. So we'll bring this up. I know Mr. Z will like this chart because he's an old-time cattle trader. But look at the gap that we had just a couple of days ago. You see the strength that we had. Look where it's gone to so far, folks. A 1.618 from the July high, and a 1.27 from the June high. That's telling you that we should have some resistance coming in here in the Christmas cattle to see if it's going to do that. And what did it do today? It went sharply higher than that. So you don't want to stand in front of that cattle market, folks. As soon as it takes out that 1.618, you certainly don't want to be in that ballpark as far as watching what's going to happen with it. So just keep an eye on it, because it's going to be very, very interesting for sure. Stock market's really doing nothing. We got the NASDAQ is down a couple points, and the S&P is up 5, and the Dow Jones basically unchanged, so it's really not much happening over in that area. But I wanted to point this out to you in the cattle market because of the importance of that 618. And believe me, there was no reason to think that that could possibly stop there, because look at the gap that you had here. This is a really strong pattern, folks. Just like the British pound was, showing to the downside, this cattle was telling you that it was right at this moment of truth. And by opening just a little bit higher today, which it did, it tells you that you got to be wrong. And what did it do? It quickly ran about 1.5 points higher, about $600. Very, 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 very quickly. We're having a question about the dead cat bounce in Tesla. It could possibly be more than a dead cat bounce. We don't know that because it hit that number exactly, folks, at $300 a share, and that's all what we're looking at. So, just because the key to the Tesla, folks, is if it closes below 300. If it closes below 300, that's going to be a very, very bad thing. But with these earnings, what they do is they help complete what the patterns are trying to tell you. And that's why when you watch the earnings, you got to figure out what's going to be the possible high or low after the earnings, whether they're good or bad. And I always suggest, wait a day just to be safe. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to talk a little excuse me, a little bit about the Dow E-mini. You'll notice yesterday, right when we started the show, we were completing this butterfly pattern up here at the 2350 level. We broke all the way down to about 140 Dow points to stop at the 133 level. You'll notice that that was a 61% retracement of the low we made on October the 25th. It was also a 78% retracement of the low that we made on the 30th. This is telling you that as long as we stay above the 2300 level in this Dow Jones E-mini, it would be able to see, what you're looking at. We're having a question here about the Treasury bonds, folks. We've been waiting to get short these. Let's just double check to see where we are. If you remember, we were looking for this rally to take us up about several points, and I believe we're very, very close to that level right now, but I can't check the prices until I get up to this level right here. And the level to sell the bonds at, my friend John, is not quite there yet. I would be looking at about another 15 pips higher at the 153.20 level. That completes the ABCD, and that would also give you you're selling lower tops, which is what you're supposed to be doing if you're short. And if you want to be long, you want to be buying higher bottoms. So you see higher bottoms in gold. You see lower tops in bonds. That should be what your trend determination is, because that determines what a trend is. If you have lower tops, lower bottoms, you're in a downtrend. If you have higher bottoms and higher tops, that means you're in an uptrend. And whenever someone asks you what the trend is, you better ask them what time frame they're looking at, because that's going to tell you whether you're going to be correct or not. So pay particular attention to that. It's going to be important. So I would be looking at 153.20 in the bonds. That's only 15 pips, half a handle from where we are right now. They might stop right here. We did take out yesterday's high by 1 pip and not go anywhere, but we'll see. We'll see you all tomorrow with Norm Winsky from Astro Trends.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.